Hello everybody and welcome to this week's Motor Trade Radio podcast in association with eBay Motors Group. It is Saturday the 10th of October and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson. So this is episode 385 of All the Chatter That Matters. And I guess we're live on tape from our virtual studios in West Yorkshire and Surrey.
We are. I don't think we've moved away from for some time.
No.
It seems years, not months. But yeah, I think everybody's feeling the strain now, aren't they? I think nowadays. But yeah, we're still here.
We are indeed, yeah. And it's been another busy week for Motor Trade Radio because we were interviewing Derren Martin midweek from Cap HBI, he's head of valuations there. And it was very timely, wasn't it? Because over the last few weeks, we've been talking a lot about used car values on the podcast. And it was good having Derren share his views on where values are at the moment, how they've been trending, and the likely course of direction into Q4. So that will be at the end of this program as well, won't it?
Like you say, it aligns with some of the headline stories we've got this week because we've got a number of financials that have been out this week that are talking about the profitability, particularly around the used cars that they've experienced post lockdown, etc. But it's key now what happens in that fourth quarter. And like Curtis says, if you've not listened to it in the week, then do stay tuned to the end and listen to Derren because he shares his thoughts on where he sees the market in the fourth quarter. Then talks about obviously some of the rental sector and what impact that he thinks that will have in terms of volumes coming back into the wholesale market. But a little bit of crystal balling was on that interview, wasn't it?
He also made some interesting observations about part exchanges, the role of part exchanges, which I won't I won't give too much away at this stage. So do stay tuned for that because I thought that was quite an interesting observation. But I guess before we go into the headlines, it's worth mentioning about the regional lockdowns, and they have been making the headlines this week. In fact, Car Dealer on Thursday ran a story about the implications for Wales. And I actually had a conversation with the NFDA midweek to ask what sort of guidance they're giving about regional lockdowns and how that affects dealers and indeed customers. And they said because the restrictions are so different from region to region, area to area, what they're doing is they're advising dealers to get in touch with them direct because obviously they've got legal backup there and they can give advice to members. So it's fast changing, and as we record this, I'm sure there will be further developments over the coming days. So definitely worth heading over to Car Dealer for the Wales update on that.
Yeah, it's an interesting update, that one, especially when they're talking about obviously some of the impact of the cases in Wales and the areas that it's hitting. And as you say, rightly so, Curtis, there, I mean, from the NFDA's perspective, I think, as areas get different lockdowns and swiftly change from one to another, it's very difficult, as you say, to give a broad view or broad advice for everybody. So again, take the support there. We talked about the safe harbour from the SMMT on last week's show, and again there's an offer there from the NFGA to get in touch with them and talk to them and where they can support you. So these people are there to help you in where you need it to get you through this.
So headlines this week, we'll start in a moment with the September plate change and how it fared for new car and van registrations. Staying with September, we'll look at used cars selling 10 days quicker on dealer forecourts as demand pushes prices up. Ford dealers need £750,000 per site to solve post-Brexit VAT issue. So we'll take a look at the implications there. We've got the latest financials from Virtue, Trust Ford, Group 1 and Motorpoint. And finally, keep the noise down if you're planning to drive a supercar in Knightsbridge. That was aimed at you, Phil.
Thanks. Yeah, we well, I've got that here, but yeah, I mean, we have got that first story, so we're heading straight into the September results and what the actual. I know we intimated the other week that where the rumours were that the month was going to finish. It did finish on 4.4% down for car registrations, and the headline. We were talking about this on before we started to record, and in terms of some of the headlines that have been connected to the September performance, and because the headline in AM Online is that the September's 4.4% car sales dip brought poorest plate change month for 20 years. So it's quite a negative headline, and you know, when we get to the financials from some of the groups later on in the show this morning, that it doesn't align really, does it? But it is a poor month. We are 4.4% down, but retail has held pretty firm compared to last year, hasn't it?
It has, yeah, because retail was down just 1.1%, which, all things considered, I thought was a remarkably good result. And you're right about the headline, because I saw a headline during the week, and it was along the lines of September hits lowest point this century, which is I thought missed the point, because yes, registrations were down. They could have been down an awful lot more because of the supply issues, which obviously we've been talking about a lot over the last couple of months. But we do know there is a lot of demand. And throughout the course of September, certainly on social media, following some of the dealer group bosses, they were reporting some really good, solid figures for September. So it does need context. And as we know, and this is something we were talking about last week, pre-reg activity for September was minimal. So yeah, what we're seeing is possibly a truer reflection of the size of the retail market.
Yeah, and when we talk about the results in a bit, you know, there is a view that, you know, there's reports that retailers, dealers are now managing to sell their ex-demonstrators, their nearly new product that they've got, because they're not fighting against those pre-reg vehicles. They're actually managing to make some profit out of those new vehicles that they are managing to get hold of and sell, because they're not got as much pressure. This isn't for everybody, but you know, some of the manufacturers have pulled back on targets, so they haven't got the pressure for the volume. They're managing to focus on profit per unit of those vehicles. You know, as you say, you know, the fleet market and the business market is down. We know why. We've talked about that, and Derren does talk about that a little bit on the interview that's at the end of this show. But you know, again, we've still got to put it in context. I mean, I've been looking at some of the European figures as I do, and you know, for September, yes, we were down compared to last year, 4.4%. We are down over 100 and odd thousand units compared to a normal September. I mean, if you look at 2016 for the UK, 469,000. 2017, we're at 426,000. So if you look at 2020 compared to 2016, we are actually thereabouts 30% down compared to a normal September. But then when you look at France in September down 2.97%, and and Spain down 13.5%. But actually, Italy went up 9.52%, and Germany went up 8.42%. But Germany only did 265,000 units compared to our 328. So for the UK, we are, when it looks at September, one of the biggest marketplaces. You know, in Germany, September 2016, only 298,000 compared to our 469,000. So again, still a lot of volume going through the UK market for the month of September, albeit down compared to last year and down compared to normal, but still a good volume of product going through, and still generated part exchanges, particularly because the majority was put through the private sector.
Yeah, and it was a good month for a number of brands. So Volkswagen, they were up 39% in September. Suzuki was up 42%. and Nissan was up 6.2%. So there were some winners there. Year to date registrations are actually down 33.2%. And I like to get the highlighter out whenever we run through the monthly year to date sales. The only brand in the year to date who have grown year on year is MG. Yeah. So everyone else is minus. MG is up 52%. And let's not forget, MG didn't do terribly well in the car dealer survey that we reported on last week. So I don't know what's going on here.
Growing brand, EV products.
Yes.
Affordable SUV crossover, and secondary franchise for many dealers. So again, good luck to them, and I think we'll keep an eye on MG. There is growth there, and there is open points as well. So and I think there's a lot of ex Mitsubishi dealers now looking at MG as their alternative franchise brand. So we'll keep an eye on that one. We have got to talk about the van CV sales for September as well, because again we were talking about the negative headlines, and I don't know if I should say this or you say this, Curtis, but there's a feeling that is there a bit of a political agenda which is trying to make sure that the government don't get a false view of the UK automotive sector and a false view of what happened in September, that the automotive sector is still needing support. It still needs the attention of the government as we get towards the end of furlough and try and get through the end of the year, and the good at the bad old word of Brexit that faces the sector. But the van sales was a release in the motortrader.com that van sales up, but SMMT warns of myriad challenges ahead. And it kind of goes against some of the sentiment out there, because van sales are doing really well, particularly in the used wholesale market. And the reports are that many businesses would put on more vans if they could get them, because there is a huge demand out there for LCV products at the minute, but not enough of it in the market.
Yeah, you're right. And I detect with the SMMT, and this applies to the car figures as well as the van figures, they seem to be more hawkish than they have been. Certainly in previous years. I mean, this year they're incredibly hawkish. The car figures, they talked about a torrid year, which, yes, we know it's been a tough year. And with the van figures, as you say, they talk about myriad challenges. But the sales were up, registrations were up more than a quarter, so they're up 26.4%. But again, that needs a bit of context, because last September it was the introduction of WLTP, and sales were down year on year last September because there was the shortage of supply issue. I think some of these sales have been pulled forward into August. So yes, it does look possibly more positive than it is. But as you say, demand for vans continues to be very strong year on year.
Yeah, I mean, it's still down 27.4% as a year to date, but in comparison, it's lower percentage than where cars are, and from a lower volume point as well. So actually, the cars are performing fairly well from a year-to-date perspective. And I know that, let's say, if the product was there coming through quickly enough, then there is demand from some of the operators out in the market that would register those vehicles. The used, as we say, used LCV is extremely strong, and it's holding itself there in the marketplace still at the minute. So again, one that we'll keep an eye on, and that kind of leads us into the next story, and this is with Car Dealer, and this is where the insight coming out of eBay Motors Group, that they say that used cars selling 10 days quicker on dealer forecourts as demand pushes prices up yet again. So kind of reporting that, we're seeing the impact of shortage of supply in the market, but actually, it is speeding up that days to sell. And there's actually now a reaction from the strength in the wholesale market that the prices are starting to go up a little bit in the retail market.
Yeah, so this is their market view analysis, and days in stock for September average 47.2. And as you say, that was 10 days faster than August. And at the moment, month on month comparisons are probably more helpful than year on year. So that is that is a remarkably good result. That's a good turnaround. And on the back of that, advertised prices for the top 50 leading makes and models actually rose 1.8% from £12,379 to 12,604. And it's interesting because prices were up across supermarkets, independents, and franchise sites, with franchise actually leading the way with an average increase of 2%. And this, it's worth referencing Derren Martin here, because he does pick up on this point in the interview at the end of the show that, we've seen how well values have performed in the wholesale market, but there's always a lag, and we're starting to see that lag in the retail sector, and retail is starting to catch up.
I suppose it was a difficult one for the dealers because the wholesale prices have been there from the start of the lockdown lift. But actually, from a dealer, you're in a challenging position there because you've got product from before lockdown that you need to move. You've got prices that are coming through from wholesale that are it's very strong, very stable prices. But actually, what you don't want to do is to start slowing that pent-up demand from the consumer market down too quickly. You've got to make sure that you maximise that, the appetite and the activity that's out there. So, they were probably very careful to make sure that they didn't react too early in the retail space for the strength of the wholesale market. But it looks like when we get onto the headlines from a financial results that many of the dealers have done very well out of the used car market, particularly through post-lockdown period as well. So one we'll be keeping an eye on.
I mean, even with stock volumes, that they averaged 46.4 units, which was pretty much on a par with August. And interestingly, incoming calls and emails for the month of September were actually up 15% on the levels that were being recorded in early March, which obviously the last plate change and before the lockdown. So a lot of interest out there, a lot of buyer interest in used cars.
Definitely. Moving on a little bit, we won't go into too much detail here because it's there's a lot behind all this. But there's an AM story come out this week, and this is that Ford dealers need £750,000 per site to solve the post-Brexit VAT issue. And this is coming from a report, an interview with Robert Forrester following their interim results, which we'll get to shortly. But this is talking about the impact of the VAT within the Ford process for the Ford dealers in the UK if the Brexit situation continues as it is now and has an impact on that process.
Yeah, this won't be a headline that Ford would have wanted to see, but it's an interesting one all the same because it spells out that, so as you say, in anticipation of how post-Brexit looks and how that will affect the VAT regime from January the 1st next year. Ford, according to this report, is proposing to amend their invoicing process for vehicles imported into the UK. And the key to this is that it will make its retailers the importer of record. So this is where the charges start occurring. And Robert Forrester, let's not forget, Virtue Motors have 22 Ford sites. So, the ramifications there for Virtue are considerable. So I think that's why he's flagged it up.
Yeah, there is a lot going on with this because, we're running out of time towards the end of the year. There's processes in place that probably can't be changed because of the coming out of the EU and the implications that has on the VAT, the difference between able to control your VAT at source as opposed to when it lands in the UK. But again, it seems to be a busy time at Ford at the minute. None of them necessarily connected, but they've had a new CEO. That this is for the global market of Ford, where Jim Farley has joined us as the new CEO of Global Ford. And this week there's been an announcement and a statement that Andy Barrett, who we all know, particularly in the social space, has taken a leave of absence as well at the minute. So there seems to be a lot going on within Ford, and like I say, we don't know how any of this is connected at all. But yeah, it's a lot going on in general. But yeah, he's taken a leave of absence. But a lot of time for Andy Barrett. He very sociable.
Yes, I was sad to see that, and I do wish Andy well, because I've met and interviewed him on a number of occasions over the years, and he's such a good guy to have at the helm of Ford. The team there likes him, the customers like him, and he really does engage with customers on social media. So let's look out for an update on that one.
Definitely.
So you're listening to the Motor Trade Radio podcast, brought to you in association with eBay Motors Group, the only weekly podcast serving the car retailing sector, and available by subscribing on Apple Podcasts, Google Podcasts, Spotify, or wherever you find your favorite podcasts, which means we're live on a device near you whenever you want to hear us.
Exactly. So just before we start talking about some of the financials, I mean, there's I must call something out this morning that it's been Dash Gupta's birthday this week on social media, and as a guest of the show a number of times, and it's always very interesting to see the social. We have mentioned it as well between Robert and Dash in the social space, particularly around football and other things. But you were mentioned in some of that social, weren't you, recently, Curtis, around the story that you had written a number of years ago, and I think it was when Dash was 38. Was it?
Yes. So you're right. That was a long time ago. Happy birthday, Dash.
I think it is his 50th. Happy birthday on your 50th, Dash. So congratulations on 50.
But the piece you're referring to, yes, I interviewed Dash, and in the interview, he said that he was planning to retire when he reaches 55, and this turned into a social media storm a week or so ago, when Robert Forrester was saying he was looking forward to Dash retiring at 50. So Dash has rather helpfully reproduced a direct quote, actually, from the piece that I wrote, saying that he will retire when he reaches 55. So just to let the team at Marshalls and indeed everyone in the industry know that we've got at least 5 more years.
And I'm sure he'll support the podcast throughout those 5 years, and we must get him on again soon. But I know I think he's just getting through the end of the year at the minute. So happy birthday, Dash, and well done on your 50th year, and good luck for the next 5 years as well. And we'll certainly hold you to that. See if you do retire, and see if Curtis did get it right in the story all those years ago. So happy birthday. So moving on, and actually moving into Robert's interim financial results that are in Motor Trader this week, and the first of a few here, that Virtue H1 profits hit by lockdown, but September trading significantly ahead. So this is where Robert, he talked to around the positive order bank that they had going into September. And obviously we've had him on the podcast fairly early on through the early days of the COVID lockdown, and the activity that were taking place throughout Virtue through that period. But again, they're talking about some reasonably good results through the post-lockdown recovery.
Yeah, so the key March to May period saw a loss of 14.3 million due to the lockdown, but June, July and August, in contrast, generated a profit of £19 million. So that was well ahead of the previous year, which was a profit of 3.8 million. But September's particularly interesting, and it does sort of tie in with our coverage of the September registrations, because the group expanded in September. On a like-for-like basis, group revenues actually increased by 14%, and within that, service revenues were up 11%. Used vehicle sales were up 9%, new retail vehicles were up 6.3%, and Motability was up 8%. And he also shares vans as well. So vans were up 53.3% in September. But the downside was fleet, which was down 27.5%. But that was due to supply constraints. So that does illustrate the strength of demand, across the business, not just in vehicle sales in September.
Exactly. And sticking with that sentiment, that in AM Online, moving over with Trust Ford, celebrates stunning Q3 COVID-19 comeback. So, fantastic result there from Stuart Folds, and we've had Stuart on the podcast, haven't we? And fantastic interview there with Stuart. But they're talking about how, what a result they've had for the third quarter of the year across their group.
Yeah, so Q3 pre-tax profits rose £5 million year on year, as it delivered 20,000 new vehicle sales between June and August. So, that's a very positive, strong showing there for Trust Ford.
Exactly. And then Group 1, again, sticking with good results. And again, seems to be very focused on that third quarter as well. So Group 1 UK, new vehicle sales up 20% in Q3. And that's a release there, short release in Motor Trader, with the results there, talking about a significant third quarter profit improvement for the US dealer group. So again, fantastic result there from those guys, with 20% over 2019, and talking about their used car sales were up a mid-single digit as well. So again, sentiment that there is strong activity out there in the market still.
Yeah, and well done to Motor Trader for spotting that, because this particular story would have been buried in the US financials, which is why it's quite a short story. But it does say that vehicle sales and service levels recovered from the lockdown that occurred over April and May. So, a positive outcome there.
And the last one on the financials this week, and that's in AM Online, and this comes from Motorpoint and Chief Exec Mark Carpenter there, that Motorpoint eyes future with confidence after June return to profit. So again, citing the challenges that the group, as many groups, faced through the lockdown period, but actually once the restrictions were lifted, the activities that took place, and that revenge buying, pent-up demand, or whatever you call it, has paid off for many of the dealers throughout the sort of June, July, August and September at the minute.
Yeah, and it shows how the group has successfully recovered combined losses of £3.4 million suffered during the lockdown period of April and May, to see profits ahead of 2019 at the half-year stage. So, a good recovery there. Yeah,
and the other week we talked around Pendragon, didn't we, on their results and what they're doing, the strategic recovery and the plans. There is rumours this week that we're expecting to see the Lookers financial announcement that we know has been deferred many times recently, that is rumoured to be, their financial results are rumoured to be out soon, within the next week. So I'm sure we'll catch up on that if they do come out before next week's podcast. But, again, it'll be interesting to see what comes out there, because I think at the minute everybody seems to be, benefiting from the lockdown recovery. There has been some acquisitions as well that have kind of hidden between some of these results, and there's probably more acquisitions taking place behind the scenes. So a lot still to come before the end of 2020, I suspect.
Yeah, and finally, so a little light relief after all the financials. The headline is from BBC News, and it's supercars. Cameras set up to detect Knightsbridge, noisy drivers. So this is it's a story that focuses on there's been this growing trend over recent years for supercar owners to basically tear around the streets of Kensington and Chelsea at night, and they've been having these gatherings, and what's happened is the borough of Kensington and Chelsea has actually put in these sound cameras, for want of a better word, so they actually monitor the sound of vehicles, and they're set to intercept vehicles making more than 74 decibels, and I think that issues a warning in the first instance, and then the fines start if you're a repeat offender.
And they're talking there about the loudest record sound was 104 decibels, which they talk about equivalent to a helicopter flying nearby. A Range Rover on Sloane Street set off a camera at just under 100 decibels. So I'm not sure if your XC40 is mentioned in this one with yourself, Curtis. You're not. You've been out there in Kensington recently. I'm not sure.
No, officer. no. I totally deny that. But I rather suspect there'll be some smaller cars caught up in this, because there's plenty of Fiestas, Polos, and Golfs out there with blown exhausts making a lot of noise.
There is. I'm just wondering how many of them will be driving around Kensington and Chelsea. But to be fair, Curtis, but yeah, possibly.
Yeah.
But yeah, I think that's it for this week. Like I say, there was lots of headlines this week, and I know Curtis yourself have been trying to sort of pick out the ones to talk about this week, because there was so many. There's no slowdown at the minute, and all the trade medias, and we've picked a few here and tried sort of representing as many as we can, but they're all doing a fantastic job of reporting the news as quick as they can get it, from things like the WhatsApp group that Car Dealer do along with their live videos, AM doing a little bit deeper dive into some of the stories they find, Motor Trade are constantly out there with theirs and the others, so a lot of great work taking place there across the trade medias, and trying to keep up with everything and make sure that the whole industry are well informed of what's taking place, so congratulations there.
Yeah, so that is all for this week. You've been listening to the Motor Trade Radio podcast, brought to you in association with eBay Motors Group. As we said earlier, do stay tuned for our interview with CAP HPI's Derren Martin for the latest on used car values. And do join Philip and I again next weekend for all the chatter that matters with our weekly review of the headlines. Until then, it's goodbye from me.
And it's goodbye from him. Hello and welcome from me, Philip Nothard, and Curtis Hutchinson to this special Motor Trade Radio podcast interview brought to you in association with eBay Motors Group.
As regular listeners will know, Philip and I have been talking a lot over recent podcasts about trends in the used car market, with the continued strength of values, as well as looking at what might be in store for Q4. So, to provide an update on the latest trends and forecasts, we're really delighted to welcome back our special guest today, Derren Martin, Head of UK Valuations at CAP HPI. Welcome back to the show, Derren.
Thanks, Curtis. Good to be back.
Good. So again, welcome back, Derren. I mean, I think we last caught up back in June. I mean, it seems a long time ago now with everything that's moving on in the world has certainly moved on since then. So it's good to have you back on today, Derren, to hopefully discuss some of the how the values have moved and the market has performed over the recent weeks, and share some of your thoughts on Q4, because as you know, there's a lot of conversations taking place on the fourth quarter as we now sort of just started. So let's start with that, if you don't mind, and take a look at the current values, especially as you've said that the continued growth of values isn't really sustainable in the long term.
Yeah, so I can't believe it was June that I was last on. It does have flown by, but we've seen a really strong market since then. It's been fairly well documented that values, certainly on older cars, went up during June. They've been sort of running along at the top since then, really. July, August, September, values stayed very, very strong. We have a live product, but they lead to a monthly value, and on monthly values this year, there's actually only been 1 month that values have dropped, and that was just before lockdown from March into April. So since then, the market has been remarkably strong, and it's carried on that way into October, really, with a really strong market. It's been made some opportunities, I think, for retailers to make some money, and I've seen some of the results that have been posted, which have been particularly pleasing there for after those sort of 2 dark months of lockdown.
And you talk about Q4, and we say there about, that recently there's been sort of the comments that, the strength of the market, it's continued to sustain its strength since lockdown, essentially, since that sort of 1st of June lockdown. And you've obviously pointed out that the growth isn't sustainable in the long term. Now, the Q4 is the immediate questions, and then obviously it's past Q4 into 2021. And have you got some thoughts on that then?
Yeah, so values at the moment are 7% ahead of where they were a year ago. So 7% up. So a vehicle that's a £20,000 used vehicle, £1,400 more than it was a year ago. That's a lot of money. That's comparing sort of a like for like, so exactly the same model at the same age and mileage a year apart. So there's some real growth there. When you look back at historical sort of cap HPI values over the long term, there is always what goes up must come down. Obviously, we've not been in this situation before, though. There's been unbelievable demand for various reasons, pent-up demand, people buying a toy, people downsizing, all things like that have led to a strong market, people avoiding public transport. But we don't feel it's sustainable in the long term, but you have to be very careful about predicting downturns at the moment. It's stayed relatively strong into October, and we think that it will continue to be relatively strong. Q4 is generally the quarter where values do drop away, and I would expect it to be probably similar to that. We might get some normal seasonality with values dropping very slightly, but I don't see that as a realignment based on those increases of 7% that we've seen. And that 7% is obviously averages. You've got city cars that have gone up almost 14%. You've got super minis that have gone up 12%. So there are some large increases that have happened there. We don't think it's sustainable, but we don't think it's going to drop off a cliff in Q4. We think at the moment it's still okay. Maybe seen a slight weakness over the last week, but only what you would expect normally at this time of year. So that's kind of our prediction for Q4, is that you might see some normal seasonal movements only, but not a realignment.
And following on from that, Derren, in terms of values, which vehicle types are performing particularly strongly at the moment? And are you identifying any vehicle types that are underperforming and maybe on the weak side?
That's really interesting to look at the detail behind it, because obviously I mentioned those city cars that have been strong. They have started to weaken off a little bit, but they're the ones that went up by the most. And then you've got older vehicles that, again, they went up by the most, and they've started to soften a little bit as well. So it's the ones that went up by the most that have started to weaken. I certainly wouldn't describe them as weak, though. They've dropped off slightly more than other sectors, but they're still ahead of last year, as I said, and they've only just dropped off slightly.
Yeah.
We've seen some weakness on electric vehicles and hybrids, where they've been slightly weaker than petrol and diesel vehicles. Strength-wise, SUVs have stayed strong. A lot of the market is now SUVs in various guises and various sizes, but they've stayed strong. They actually went up going into October and have stayed level so far this month. I think a really interesting area is sports cars, where people have gone out and bought a toy or are looking for something that they're kind of maybe throwing caution to the wind a little bit after what's happened with the pandemic. They've got a bit of money in their pocket. They've avoided holidays, unfortunately, so they've saved some money. So we've seen sports cars be really strong. Some examples like RS3, Audi TTs, Porsche 911s, they've actually been going up in value. So that wasn't the trend that was happening before lockdown, but it's certainly happened since. So some definite strength there.
There's a few toys parked on people's driveways then, as a consequence of that. Then, by the sounds of it.
Yeah, definitely.
The little bits of the soft top convertible sports cars parked as a second car for people at the minute. Then I suspect. I mean,
convertibles stayed stronger for longer this year as well. So they usually weaken around May, June time. Values have only just started to soften a little bit for convertibles. So yeah, similar story to the sports cars. Yeah.
And you mentioned EV and hybrid there, and and we know that there is an uptake in the new car market in terms of percentage performance and volumes going through the new car market, whether that's driven through or through appetite. And you mentioned there about values performing, but anecdotal evidence is suggesting that used car buyers aren't currently being driven by the economical considerations, so that green agenda that, as you say there, going out buying the sports cars, the convertibles, and that side of things. Do you think that will continue for some time, or do you think that's just an immediate reaction to the lockdown and current market?
I think that with the sort of BEVs and PHEVs and the like, I think it's more supply and demand, really. There's obviously been increases in registrations over the years. There's now more of those in the market than there have been in the past. And I think people aren't prepared to pay the premium for them that they sort of have in the market over petrol and diesel cars at the moment. So that's why the prices have dropped. I think there's still demand out there for them. Well, there's definitely demand still for them. It's just that the supply levels have gone up, and that premium that they hold, people aren't necessarily too worried about environmental considerations. So if they see a petrol vehicle that's equivalent, they're going to buy that one. And even diesel, we've spoken to many dealers that have seen diesel values looking strong as well. So I think going forward, demand for hybrids and electric vehicles will increase, but also supply levels will increase. So maybe there needs to be a little bit of a realignment, which has been happening, to get them closer to their petrol and diesel equivalents.
And following on from that, Derren, with talk of the government possibly considering bringing the ICE ban forward to 2030, what's your view on when values of used diesels, petrols and hybrids will start to be impacted?
It's a very difficult one to call that, because people are still going to want these vehicles, and there's still going to be a lot of them in the used car market. So I don't think that that's anything in the short term that's going to affect any values. Certainly with our forecast products going forward 5 years, we're not going to see anything in that period of time. We've not affected anything. And I think even as you get closer to 2030, there's not going to be a drop-off in demand for used cars. People, and they're not banning used cars, it's the new car targets. So if anything, values could strengthen around that time. It obviously dependent on legislation and cities banning like diesel vehicles or ICE vehicles altogether. But overall, I can't see that that's going to happen. That there's going to be any drop-off in values imminently, really. People hold their cars for longer now. Cars are more reliable. There will be lots of those vehicles still around, and prices will be maintained for them, in our opinion.
And just as a follow-up to that, Derren, how are diesel values actually performing at the moment? Because we can see demand falling away in the new car market. Indeed, I think in September there were more sales of BEVs and FEVs than there were diesels. So how's that translating into the used car market in terms of diesel values?
I think with new car, it's down to what the manufacturers are producing as well. It's not necessarily down to demand, although there is obviously a movement away from diesel vehicles and questions asked about if I buy a diesel, am I going to be able to go everywhere? Am I going to be able to sell it for reasonable prices going forward? So that obviously plays on people's minds. But in the used car market, we've seen diesel and petrol vehicles both being strong. It depends where you live. If you live in rural areas, you probably still want a diesel if you're not too bothered about driving into a big city, which obviously not many people are. You tend to, in the past, have used public transport for that, and at the moment, people aren't really driving into city centres either. They're almost deserted due to what's been happening. So they've stayed strong. Diesel values. It has been those hybrids and electric vehicles that have been dropping down. So yes, some strength there. Nothing to worry about really for either petrols or diesel used values at the moment.
And I mean, recently there's been thinking about the fourth quarter now. Back on that again. I mean, that's obviously the immediate question on everybody's mind around what's going to happen in the final quarter of the year. We've come out of September, we've seen the decline in the new car market and the impact of the supply in that sector. And there's been talks recently around defleet, particularly from the daily rental market, about volumes entering the wholesale sector in the fourth quarter, and talk about that. And obviously the daily rental, you're close to it around your previous experience and what you're reasonably passionate about, I think, is Derren, in that rental market. And I think it's very difficult to just sort of reference daily rental because it's a very diverse sector. But what's your view on the volume coming out of the rental market and that defleet market, and what the impact will be in the wholesale sector going into the fourth quarter, and where you see that coming now in the final months of the year?
As far as we're concerned, there's nothing to worry about on the short cycle volumes or rental volumes in particular. What's happened, it's been a really strong market for used cars, and rental companies have been selling during that period. They've been making good money during that period, and some of them have been bringing forward some of their D-fleets because they haven't needed them on their rental fleet, because unfortunately airport business has dropped off. Some leisure has dropped off, although there has been sort of renting cars to go on holiday and that type of thing. If they haven't needed the cars, instead of hanging on to them and defleeting them around now at the end of the summer when they normally do, they've been selling them over the summer months. And as I say, they've been making good money. So we do speak to a lot of rental companies, and I don't think there's absolutely anything to worry about with regards to volumes hitting the market. They'll be fairly normal. Some rental companies do come out of the market in the last quarter anyway, when values can weaken. Caveat to that could be, and I guess this is why there's been some press about it, is that some of the manufacturers could have been defleeting some of their ex-rental cars that they have on buybacks. But the manufacturers and rental companies, to be fair, are very responsible with how they market. And it's only if you get a real big batch of volume coming for particular models and things like that values would be adversely affected. We don't think that's going to happen. We've certainly seen some very responsible remarketing over the last few years, really. And recently, as I say, they've been taking advantage of a strong market and selling them. And why wouldn't they? So we don't really think that there's anything to worry about at all in that area. Obviously, those cars have now gone back into the market because of what's happened over the summer. We think the volumes going forward will be lower for short cycle, based off of lack of registrations as well.
And just added to that, I mean, obviously, the reports from September is that it was about supply that has hindered some of the good growth that some of the retailers have had. Whether that's new or used car, and a lot of them are reporting that they could have had an even better September if the new car supply had come through that they'd had orders on, or there was more choice of used vehicles in the market for them to acquire. So, is it a case that any defleet coming through that actually, there's still they still need to operate, don't they? Those volumes would be absorbed fairly easily across the sector of any kind of increase of volume coming into the sector.
Yeah, they'll be welcomed. Any used cars that come back in will be welcomed. Obviously, rental companies will not have had a big September with regards to registrations, partly because they don't need the cars, and partly because the manufacturers haven't been able to get the supply, so they'll be focusing on selling them more into retail. So it's been a smaller market for rental then. But what I would say is that those cars that are coming back in will be welcomed. They'll be snapped up because the used car market remains strong. There may be some small drops going forward in prices, but nothing seismic. And we do think that any sort of realignment won't be until next year. So at the moment, cars coming back in, will get snapped up and will get sold and absorbed into the used car market very well.
And finally, Derren, you've touched on this whole issue of supply and demand in the used car markets and how that's been impacting the sector since lockdown. Looking at Q4 as a whole, how do you see this balance of supply and demand panning out? And we talk a lot about pent-up demand from consumers. Do you see that continuing?
I think obviously the pent-up demand won't continue forever, and we could be seeing sort of the end of that as well. You've got an economic impact going forward as well. You've got the end to furlough, although that is being replaced with a different sort of government program. But there will be some economic uncertainty. I think one interesting dynamic now is from a lot of the retailers that we speak to. They're retailing their part exchanges that come in that they would previously have traded. So I think there will be lower volumes through certainly some of the auction companies going forward, the ones that deal more in that part exchange market rather than have sort of corporate deals with customers. So there will be less volume coming in there, which will keep things relatively strong for the last quarter. So the economic impact will have an effect, but also that does tend to affect younger ages because we think then the hospitality area has been affected more. That sort of people talk about that 18 to 24 age range. They are unfortunately going to be the most affected. They aren't traditional car buyers, although that is on the increase as they avoid public transport. So there will be an economic impact which will maybe put people off buying a big ticket purchase, but we don't think supply levels will be high. September was 4.4% down, which is 15,000 vehicles or something, so 15,000 less part exchanges coming back into the market anyway. So the prices have gone up, as we said, so there will be some sort of small pricing adjustment potentially in the last quarter, but not massive. We've seen a very slight weakening recently. We think quarter four will stay relatively strong, maybe some small seasonal movements. We actually think that next year could be more of a concern, but it's so difficult to predict with what's happened. We've never been in this situation with a pandemic like this before. We do think that values currently are unsustainable, but that could be 6 months away before they start to make a realignment when volume comes back in next year from previous years. So those 3-year-old cars from 2018, the extensions from leasing companies and Motability and the like, that's when there could be an impact. But at the moment, I certainly don't want to be one that's predicting a sort of a slide in values when it's still looking relatively strong at the moment.
And just following up on that point you made about part exchanges, September, the market was down, as you say, 4.4%, but within that, retail was just down 1.1%. So the assumption would be that dealers saw a lot of part exchanges coming in as a result of that. So you would expect them to be trading cars as part exchanges, retailing them, that in normal times maybe they would have just put out to auction.
Yeah, definitely, especially at that lower price range, sort of £3,000, £4,000, £5,000. They are if they're a reasonable vehicle, then they are retailing those and making healthy margins on that. And yeah, so there has been a definite sort of sea change there, and also part exchanges that come in from a different brand. If they're a franchise dealer, they're retailing those now, more confident to do so than maybe in the past that have just, as a policy, have put them through the auctions. So yeah, there is a bit of a shift there. I mean, the auctions have still definitely got their place. They are cars that will still need to go to the auctions, and I would say physical auctions will still have their place because there are still some damaged cars that people will want to see before they buy. So that area is not reducing dramatically, but there will be a bit of a shift towards retailing more part exchanges, as has happened over the last few months.
Yeah.
I mean, it just leads me to say thanks again for coming on, Derren. I think it's more important than ever now that we get you back onto the show and share some of your thoughts and put a little bit of context around some of the the figures and the headlines that we're seeing in the media at the minute. I mean, Q4 is, as we said all the way through this podcast, a crucial time for the sector in general. I think one of the points I've picked up out of this and conversations that I've been having is that, you know, if we start to see some kind of easing of values, easing of kind of that pent-up demand and activity, that it's a case of remembering where we were at that point earlier from the lockdown. You know, we've been at a very high level, haven't we, in terms of activity, demand, values, that any sign of easing isn't necessarily a crash or an issue, that it could be just kind of a return to normality of a normal seasonality in the fourth quarter of the year as we approach the end of the year.
Definitely. We need to be careful not to overreact to more strength or overreact to more weakness, because as you say, we could just have some sort of more normal times. It's fact of life that cars depreciate. As cars age in their life cycle as well, they deflate in value. As a new model comes out, it then is worth less in 3 years than it was when it comes out. Those factors will still happen. And it is very important that we don't sort of overreact if the market does start to come down again. It's normal for it to come down in the last quarter if prices do soften a little bit, and we are seeing it at a very, very early potential stage of that in trade values, but it's not being replicated in retail at the moment. So any drops are only very small at the moment. And as I said earlier, SUVs have stayed strong. They're still where they were sort of this stage last month, maybe even slightly higher than they were this stage last month. So I think it's very important, Phil, to put it into context. And I'm more than happy to sort of keep regular dialogue going, just to keep people appraised of what's happening as we move through the next few weeks.
Yeah, and then get the crystal ball out for 2021.
It's so difficult. As I say, we've never been in this situation before, and I certainly don't want to be the one spreading doom and gloom. But when it does start to turn, well, obviously people need to be aware of that. Keep an eye on our live product to make sure you're not sort of making purchase decisions based off last month's data and those sorts of things. Yeah.
And all three of us have been in the industry long enough that we've seen the resilience of the sector through various, challenges that it's faced, and there's out of the challenges comes opportunities, as the old cliche says. So we'll see new emergence of opportunities. But as you say, everything that goes up does come down essentially, and we need to realise that. But like you say, there's plenty more to come. But I think as we've talked around again through this, it's immediate focus is the fourth quarter, isn't it? Because whether you're a senior leader of a retail group or independent dealer, whoever you are within the sector, I think there's certain things that are out of your control, and it's better to focus on the areas that you can influence and you can control at the times like now.
Yeah, definitely.
Well, look, many thanks for coming on today, Derren, and for sharing your thoughts on how used values are performing at the moment, and especially as we go into Q4. So many thanks for coming on to the show, Derren.
No, it's a pleasure. As I say, it's really important to keep an eye on what's happening in the market. And if it does drop away, then no overreaction, and we'll keep people appraised of what's happening.
Yeah, absolutely right. Thanks. So unfortunately, that's all we've time for now. You've been listening to this special Motor Trade Radio podcast interview brought to you in association with eBay Motors Group. Do join Philip and I again for our weekly roundup of the latest industry headlines on Saturday. Until then, thank you for listening and goodbye.